Welcome to the Demet in Dubai podcast series, your destination for in-depth insights into Dubai's real estate sector. Demet is not a real estate agent, but a trusted advisor to help you structure your thinking, analyze, and understand the true potential of investments. This podcast will guide you in filtering out the noise, the marketing, and the false arguments too often put forward. Today, we're embarking on a deep dive into Emaar Properties. I mean, it's a name that's pretty much synonymous with Dubai's skyline, isn't it?
Absolutely. You can't really talk about Dubai development without talking about Emaar.
Exactly. And for many of you listening, if you're considering real estate investments here, Emaar is probably right near the top of your list.
Off in the top, I'd say.
Right. So what is it about them? What makes them so impactful in this market? And maybe more importantly for our listeners, what should you, as an investor, really understand before, going in with them?
That's a really crucial question because, look, when we talk about Emaar, it's much more than just another developer building towers. We're really discussing a fundamental force, I think, that has genuinely shaped the urban landscape of Dubai. I mean, literally turning sand into these global destinations.
Yeah, it's quite something.
So our goal today is to sort of unpack their approach, look at what makes them tick, their secret sauce, if you like.
Okay.
And then crucially, weigh up the opportunities, which are significant, against the realities, the practicalities that you as an investor really need to grasp. Get behind the marketing gloss,
Yeah, filter out that noise we mentioned. Okay, so let's unpacking this. When you look at Dubai's transformation, Emar's footprint is just everywhere.
It's undeniable.
Their chairman, His Excellency Mohammed Alabar, often talks about this need for shining examples in the Arab world, with Dubai as a key hub. What's the core of that vision? How does Emaar actually embody that?
Well, what's really striking is the level of ambition, but also the dedication. Alabar himself, he describes his success not just as luck, but as being a hardworking, lucky investor. He talks about grinding 7 days all the time. And I think that ethos, that drive, it translates directly into their strategy.
Right. It's not just talk.
Exactly. Their mission isn't just, building apartments. It's about creating these futuristic residential, retail, entertainment, and leisure assets that they name transform lifestyles, not just here, but globally.
So a much bigger picture.
A much bigger picture. It's about sustainable, long-term growth, value creation. Look, the proof is kind of in the pudding, isn't it? Forbes consistently ranks them as the #1 real estate developer in the whole MENA region.
That's Middle East and North Africa, right?
Correct.
Yeah.
That speaks volumes about their impact and, well, their financial strength. So they're not just building buildings, they're actively shaping how cities are lived in, building these little microeconomies, really.
So it goes way beyond just the physical structures. It's about sculpting entire experiences, entire ways of living within these sort of curated environments they create.
Precisely. And here's a key point, a real differentiator, especially when you look at how volatile global real estate can be.
Okay.
Their primary focus. Alabar's been quite open, saying he's never been crazy about offices.
Interesting, because offices are such a huge part of real estate elsewhere.
Right. Now, don't get me wrong. They have commercial elements, obviously significant retail, but the vast bulk of their investment, their strategic push, is squarely in residential and these integrated mixed-use communities.
So that's a deliberate choice.
Oh, absolutely deliberate. By leaning so heavily into residential and the whole community package, they've made themselves less sensitive to things that really batter Western markets sometimes.
Like what?
Well, like fluctuating mortgage rates hitting office uptake or huge amounts of capital tied up in speculative office blocks that might sit half empty. Their focus gives them this inherent stability.
So building places people actually live in rather than just work in makes them more resilient.
In essence, yes. They've kind of de-risked their core business by focusing on that intrinsic demand for lifestyle and living space, rather than being totally reliant on, say, corporate leasing trends. That's a key insight for you as an investor.
Okay, that makes a lot of sense. And that focus naturally leads us to what people often call Emar's secret recipe.
Right.
How do they do it? How do they consistently roll out these massive successful communities? What are the actual ingredients?
Well, the core strength, I think, is their mastery of being a master community builder. It sounds simple, but it's incredibly complex to execute at scale.
It's more than just building houses next to each other.
Oh, much more. It's a pretty standard recipe in terms of components, but it's the execution, the scale, the foresight. It involves deep alignment on infrastructure, plus their diversified business arms all working together.
Okay, infrastructure first. What does that mean in practice?
It means they don't just drop houses onto empty land. They build the entire ecosystem around them. Robust infrastructure from day one, making the community viable, attractive, instantly.
So roads, utilities.
Yes, but also more advanced stuff. Take district cooling. In Emaar beachfront, for example, they use seawater for cooling.
Seawater, how does that work?
Basically, they circulate cold seawater through heat exchangers, which then cools fresh water that chills the buildings. It dramatically cuts down the need for energy-guzzling chillers.
Wow, okay, so it's efficient and greener.
Significantly. Big reduction in carbon footprint for cooling water.
Oh.
And you see smart thinking in irrigation, too. In places like Arabian Ranches, Dubai Hills, even parts of downtown.
What are they doing there?
They use treated sewage effluent TSE water. It's purified wastewater, safe for landscaping. Saves a lot of potable water, maybe around 6% water savings in those areas. It shows they're thinking about long-term sustainability and efficiency, which adds value.
So infrastructure is the base layer. What else is in this recipe?
Okay, then you layer on their other businesses, and this is crucial. Their retail arm, Emaar Malls. It's a giant.
The Dubai Mall being the prime example, I guess.
Exactly. It's one of the world's biggest, sure, but it's also one of the most visited. Tens of millions of people every year. It's not just a mall. It's a massive revenue engine for Emaar.
Right.
And critically, it acts like a magnet. Huge footfall that directly lifts the value of all the residential stuff around it in downtown.
Yeah.
Same idea with Dubai Hills Mall for that community.
So the malls anchor the communities.
They do. They create constant buzz, activity, demand. The numbers back it up, too. Q1 2024, Emaar Malls had, 96% occupancy, footfall up 7%, tenant sales up 9% year-on-year.
Impressive. And rents, I heard they took a hit during the pandemic.
They did, like everywhere. Dropped to around 379 AED per square foot in 2020, but they've bounced back incredibly strongly. Hit 709 AED per square foot in 2023.
Wow, that's higher than before the pandemic.
Yeah, higher than the 579 AED they were getting in 2019. Shows the pulling power of these locations.
Okay, so malls are a big piece. What else?
And there's hospitality, the Address hotels, Vita, even the Armani hotels.
Right, the luxury hotel brands.
These aren't just standalone hotels. They're woven into the communities. They add that layer of luxury, service, amenities. Enhances the lifestyle for residents, sure, but also pulls in tourists and business travelers.
Fueled by Dubai's tourism boom.
Exactly. Hospitality revenue was up 13% in 2023, another 12% in Q1 2024. Hotel occupancy is solid, around 76%. And they're still expanding 3 new hotels coming online soon, plans for nearly 20 more under management deals.
So they're doubling down on that integrated luxury aspect.
Definitely. And it extends further into leisure and entertainment, too. Think about the Polo and Equestrian Club, the Arabian Ranches Golf Club, Dubai Marina Yacht Club.
These aren't just amenities, they're lifestyle destinations in themselves.
Precisely. They're integral parts of the whole package. It's this comprehensive, all-in approach that attracts residents looking for a complete lifestyle, and importantly for your listeners, investors who see they're buying into an entire managed ecosystem designed for long-term value.
It really is that full package deal, isn't it? Not just buildings, but infrastructure, retail, hospitality, leisure, creating these almost self-contained, thriving environments.
That's the essence of it. Now, let's see how this rescue works in practice. Let's look at some specific projects, especially ones that maybe seemed like a big gamble at the start.
Okay, like downtown Dubai. Was there skepticism there? It seems so obvious now.
Well, maybe less skepticism about the location itself, but the sheer scale was unprecedented. Burj Khalifa, Dubai Mall, the Fountain, the Opera, transforming this huge undeveloped area into a global landmark.
Right.
It wasn't just building, it was creating an entire city hub from scratch. It was a massive statement of Emaar's capability.
A demonstration project almost.
In many ways, yes. But then you take Dubai Hills Estate. That's a perfect example of a location that maybe 10 years ago people definitely thought was risky.
Really?
Yeah.
It's so sought after now.
Exactly. Back then it was quite far out, just a big patch of sand, really. People questioned if the demand would be there.
So what did Emaar do?
They applied the recipe. Master planned the whole thing. Built the Dubai Hills Mall, the championship golf course, schools, parks, everything. They didn't wait for demand. They created it by building the complete lifestyle.
And it worked.
Spectacularly. It's now a prime premium area. Huge capital appreciation. It shows their power to create value where others just saw emptiness, and it shifted perceptions of what prime means in Dubai.
Okay, so they can essentially create their own prime locations. Are they doing that now with newer areas?
Yes, they're applying the same playbook to developing communities like the Valley or parts of Emaar South. Now, these newer areas, they can face challenges.
Like construction delays. You hear about those.
Yes, delays are definitely a factor. We've seen it in some Emaar South projects, for instance. Handover dates getting pushed back. It happens across the industry here, to be fair.
But Emaar eventually delivers.
That's the key difference, and why investors often stick with them, despite potential delays. Emaar has this decades-long reputation for seeing projects through, unlike maybe some smaller players. So there's a level of security. You might wait longer, but you'll likely get what you paid for.
That reputation must be worth a lot.
Immense value. There's a great anecdote that illustrates the long-term payoff. An Emaar villa sold off plan in an earlier community for, say, 1.5 million AED.
Okay.
Years later, after being rented out for maybe 6 years, it sells on the secondary market for 2.5 million.
A good jump.
But wait, in today's market, that same villa is now valued at around 3.6 million AED.
Wow, more than double the original off-plan price over, what, a decade or so?
Exactly. Despite market ups and downs, different owners, it shows the compounding value creation Emaar communities often achieve.
That's compelling. It really does sound like they have this repeatable model for turning potential into profit, turning skepticism into serious appreciation.
It is a powerful model, but, and it's a big but, it comes with its own specific considerations for you as an investor.
Right. The big question for our listeners, should I invest with Emaar? What are the real nuts and bolts, payment plans, exit strategies, risks?
Okay, let's get into that investor lens. Emaar's market position creates a unique set of dynamics. Off-plan is a very common strategy.
To buying before it's built, basically.
Right. Buying based on the plans, often at a lower price, paying in stages during construction. The aim for many is to sell it closer to handover, or maybe just before, to capture that appreciation.
We saw from the anecdote that can work well.
It can be very lucrative, yes.
Yeah.
Doubling your money over time isn't unheard of, sometimes even faster if you flip it before handover to someone who wants a brand new place but doesn't want the wait.
But it requires patience.
Patience, absolutely. And, critically, capital. Significant capital available when needed during the build.
Which brings us to payment plans. You mentioned they're quite favorable to Emaar right now.
Yes, currently the structure often means the investor pays a large chunk, maybe up to 80% of the total price during the construction phase. The final 20% or so is due on handover.
So you need substantial cash ready to go in stages.
Exactly. You need to be prepared for those payment calls. Emaar, especially in a strong market, isn't typically flexible on extending those payment timelines once you've signed.
Why do they structure it like that?
Well, it's great for them. They're essentially using investor money to fund a large part of the construction. It reduces their need for bank loans, boosts their balance sheet, improves margins. But it puts the onus on you, the buyer, to have that disciplined cash flow.
And Emaar themselves, they're financially solid.
Exceptionally. Very healthy balance sheet, excellent liquidity. They can manage their funding needs effectively, which does give you confidence they'll finish the projects.
Okay, so payment structure is key. What about getting out? Exit strategies.
For off-plan, as I said, selling just before handover is common. You catch that wave of buyers wanting near-ready properties.
What about waiting until after handover?
You can, of course. Rent it out, hold for longer-term appreciation. Or another option is the secondary market, buying ready properties that someone else bought off-plan.
Are those sometimes cheaper?
Sometimes, yes. You might find a ready unit that's less sort of hyped up in price compared to a brand new launch in the same community. It's another route, especially if you don't want the off-plan wait or construction risks.
Makes sense. What about the overall market? You hear worries about oversupply in Dubai?
That's a valid point to consider. The luxury market has had a great run, lots of international buyers.
Yeah.
Emaar sales are booming up 50% in Q1 2024, huge pre-sales.
How much is pre-sold?
They reported something like 92% of their 30,000 plus units under development are already sold. That's massive. It hugely de-risks things for them, gives them massive revenue visibility, a backlog of around 70 billion AED over the next few years.
Sounds very secure for Emaar.
It is. But the broader market context is important. There's a lot of new supply coming online across Dubai from 2025, 2026 from all developers that could put pressure on prices in some areas or segments.
So potential headwinds.
Potentially. But here's where Emaar's strength likely comes in. Their brand, their track record, the quality of their master communities. They're probably better positioned than most to weather any oversupply pressures. They'll likely maintain better pricing power and attract buyers, even in a tougher market.
So Emaar Properties might hold up better than average if the market softens.
That would be the expectation, yes. Their asset quality and brand give them a significant edge.
Okay, so it's a complex picture. Strong track record, great communities, but you need the cash flow, you need patience for potential delays, and you need to be aware of the broader market.
That's a good summary. It's a strategic decision weighing those factors.
Now, let's touch on those realities a bit more directly, the challenges. We mentioned delays.
Yes, and we should be clear about this. While investors generally, appreciate Emaar for the value creation, delays are probably the most common frustration you hear about.
Stories of multiple delays on the same project.
Yes, you definitely hear those stories. It impacts plans, returns, causes stress. Now, as I said, it's an industry-wide issue to some extent, but Emaar isn't immune.
But the key is they do deliver eventually.
That's the crucial differentiator.
Mm.
They're seen as the gold standard in terms of actually finishing what they start, even if late. That security is paramount for investors putting down large sums. It's a delay risk, generally not a default risk.
Okay. What about quality? For the price point, is the finishing always top tier?
That's a more nuanced point, and it often depends if you're an investor or an end user living there.
How so?
For an investor focused on appreciation and rental yield, the overall community, the brand, the location, the amenities, those are often paramount. The exact type of tile or faucet finish might be secondary.
But for someone living there,
An end user might compare the finishing to, say, a super high-end bespoke villa or a boutique luxury development and perhaps feel it's very good, but maybe not the absolute pinnacle of craftsmanship in every single detail.
so investor priorities versus end user expectations can differ slightly on that front.
Exactly. Investors often find the overall value proposition extremely compelling, even if an end user might have wished for slightly higher spec finishes in some areas. The investment fundamentals, location, community, brand, potential return, tend to outweigh those finer points for the investor audience.
So it really is that balance again. Investors are weighing the proven appreciation, the strong community framework, the brand security against the potential for delays and maybe finishes that are good, but not necessarily ultra bespoke luxury.
Precisely. They're generally buying into the Emaar ecosystem, the track record, the delivery certainty, even with the occasional headache.
So wrapping it up from an investor's perspective, Emaar seems like lower risk compared to smaller developers, maybe, with potentially strong long-term returns if you're prepared for the structure.
Yeah, I think that's a fair assessment. Lower risk primarily because of their scale, financial stability, and track record of delivery. Higher potential return driven by that master community building expertise, the integrated malls and hospitality, and the brand premium. It's that proven formula, executed consistently over decades, that makes them such a dominant and often preferred choice, despite the known challenges like payment terms and potential delays.
Okay. So, to recap for everyone listening, we've really dug into Emaar's unique approach, this master community building, integrating everything from infrastructure to malls to hotels. We've looked at how they've turned areas like downtown and Dubai Hills into massive successes, sometimes against initial skepticism, and how they're applying that same model now to places like the Valley.
Creating value consistently.
And we've laid out the practical side for you as investors. The need for that cash flexibility for payment plans, the reality of potential delays, but also the strong track record of appreciation.
It's about going in with your eyes open to both the opportunities and the requirements.
Absolutely. Which leads to a final thought, perhaps. Given Emaar's proven ability to essentially create prime locations out of new areas, how might that change our whole idea of what prime even means in Dubai over the next, say, 10 years?
That's a fascinating question, isn't it? What new areas might they transform next? What becomes the next downtown or the next Dubai Hills? And how does that constant evolution redefine value and opportunity for investors looking ahead? Where will the map be redrawn?
Definitely something to mull over as you structure your own thinking about Dubai's real estate future. Thank you for joining us on this deep dive into Emaar Properties. We hope this has given you some valuable insights for your own investment journey.